the mortgage by the age 70.
Okay, so you're not going to be eligible.
You want to talk about mortgages?
She was telling me to shut up.
He has to shut up and I need to talk more.
Hey guys, welcome back to the High Homes channel. Today's our first episode of Expert Talks where you guys are going to learn everything you need to know when buying a property in Spain. You ready? Let's go. Hey guys, welcome back. Hey guys.
Hi.
So today's topic is mortgages. So we've brought in our mortgage expert, Alison from Mortgage Matters Spain. And we're here with Matt, Director of Operations and Marketing, and we're going to be talking finance. Coincidentally, Matt here is also interested in getting a mortgage this time next year.
We just moved to Spain. We'd love to really kind of like lay our roots and market here.
For those of you that don't know, we did a video with Alison, it was about 2 years ago?
A couple of years ago, yeah. It was really good fun, actually. We did it down in Calpino.
Yeah,
it was a beautiful day. We had a nice little walk.
Yeah, it was lovely, no?
Yeah, it was
so
really good.
I'll link that video there for you guys to have a look at that. A lot of things have changed in the last 2 years, and we thought this is a perfect time to update our audience on what's happening, what's going on in the mortgage markets.
Yeah.
So the first question would be, since our last video, what's changed?
We're still here, so that's a good thing. That's a good place to start.
Sure.
Still doing mortgages, still selling property in your case. The banks are still very keen to lend to non-residents and to residents as well. They're very dynamic in the sense that they really want to attract customers. So we're in a good position because we're independent. We have agreements with all of the major banks, so we're able to reach out and get the best deal for the client. But what's changed? Not an awful lot, to be honest. There's still a lot of demand.
The important thing is they're still keen to lend to non-residents, which is what
very,
everyone
very
wants to hear.
Still
Can you
very
get a mortgage in Spain being not being Spanish?
Yeah.
Yes.
Yeah. No, a lot of people say to me, can I get a mortgage? You know, I've got my own business back home. Will they understand that? Yes, they will. So yes, entrepreneurs or people who are employed, they're very, very keen to lend.
A good question for the audience is, what's the difference if you're a resident compared to being non-resident? Most of our audience would be non-resident looking to buy a, holiday home or maybe relocating, but at the moment of applying, they're non-resident. So what's the main difference between resident versus non-resident?
Residents obviously are here, living in Spain. They've got residency, and the criteria is slightly different for residents.
In terms of?
In terms of, they'll give a slightly higher LTV, loan to value, for residents, and the interest rates are slightly more attractive as well. For
LTV is
loan
it
to value.
Loan to value? So that's the percentage of money on the property price.
That's right. Well, it's LTV is purchase price or valuation, the lower of the two. Yeah.
So for example, Matt here, which is now a resident, would be entitled to a higher LTV loan to value of around how much?
80% would be the
80%. Okay,
Yeah.
and then if you're a non-resident, you have an LTV up to
70.
70%.
Yeah.
Right.
But just to interject there, clients who come over and take out their residency, but they won't be treated as a resident as far as applying for a mortgage is concerned until they've actually done at least one tax return in Spain.
You mentioned that I would probably even have to have 2 tax returns before I'd be eligible for the full 80%.
Exactly. What they're looking for normally is 2 tax
Of
and
income.
consistency of income. That's exactly right.
So that would be in your case as a non-resident, and then in a case of a non-resident that's not looking to move over here, they would be last 2 tax returns from their own country.
Yeah, from wherever they're from. Exactly.
Okay. So how difficult is it, and how do they calculate if you're eligible to get a mortgage?
Like I say, they'll be looking at for income, so they want to see consistency of income over the last 2 years. And then what they'll do is they will give you a percentage of that net income in debt repayments.
Okay.
So that's including any debt that you've got back home plus the new Spanish debt.
Okay.
So it's called a DTI, a debt income ratio.
Okay.
Debt to income.
Okay.
Usually they will allow you between 35 and 40% of your net income.
Okay.
Let's use some easy numbers. Let's
Okay.
say you're earning 10,000 euros net
10,000.
a month.
Okay.
You're allowed between 35 and 40% of that in debt repayment. So let's say you have 10,000 net per month. That would allow you to have 4,000 euros in debt repayments. Let's say you've got a mortgage back home where you pay 2,000 on. That leaves you 2,000 for your mortgage repayment in Spain.
How long can I actually get a mortgage for?
For non-residents, they will normally want you to have finished your mortgage by the age 70.
Okay, so you're not going to be eligible.
If you're 50 or younger, you've got your 20 years. We can push that in some cases to up to the age of 75, so we can do up to 25 years, if you can show that you've got a very strong pension fund. 20-25 years, max. Residents, they'll go a bit longer, they'll do up to 30.
So for residents, they will do up to 30 years. Okay. Let's say we start the process of me wanting to get a mortgage. How long before I actually get it?
Well, there's two parts to the mortgage process. So the first part is actually getting the financial, the economic side approved. So that's the part where you send in your tax returns and your credit reports and your bank statements, etc. And we look at the economic side of things. And that we can get approved actually prior to you finding a property. In the case of your clients, it's always useful for you to say to them, look, talk to Alison before you come out, before you find a property, get yourself pre-approved on the economic side of things, and then you'll have the confidence when you come out, if you see something,
you can make a move.
You know, sign a contract, put down a reservation, etc., etc.
It's actually, wouldn't you say it's advisable in this market today,
Totally.
given how quickly resale properties shift?
100%. Like I always tell everyone in the office, like, you know, if you're speaking to a client that's looking to move over and buy a property, coming over in the next 2 months and wants to buy a property with a mortgage, get pre-approved. Like, it's super easy. We always get our clients in touch with you. They speak to Alison, send the documents over, and they know when they come over, they can actually make a deposit or put a reservation down on the property.
It's actually the best way to avoid disappointment when shopping for a property on Costa del Sol.
100%.
Right? Because you see the property you love, you want to make a move on it, but you're not pre-approved for a mortgage, it's going to slip away. Get pre-approved for a mortgage before you go shopping for property on Costa del Sol.
Exactly. The pre-approval, once that's done, that's usually valid depending on the bank for a period of 3 to 4 months. So if the client doesn't find a property within that time, it's not an issue.
Will they provide an extension to it?
So basically we can get that pre-approval renewed. Once the client has found a property, we'll get it renewed, and it should just be a formality as long as their circumstances haven't changed.
What about interest rates? Have they changed since since you guys last shot the last video? Where are we today in terms of interest rates?
Yeah, I think it was back in 22 when
22,
we did that video, wasn't it?
Yeah.
So that was a couple of years ago. So good news is that rates have started to come down, which is good. We had a rate cut just about a month ago. The Central European Bank dropped the rates by 0.25, and the forecast is for them to continue to come down. So that's good news, as long as we keep inflation under control.
So what are they at today?
Yeah, base rate at the moment in Europe, European base rate, 12 months Euribor, is around about 2.7 at the moment.
It's cheap, you know, I mean.
Now, it doesn't mean your clients will get 2.7.
Yeah, sure.
But it's come down from, you know, it was up at 3.5, etc. So it's
But that's what mortgages are closing at on average, 3.5, 3.6, no? Like the banks are
round about that.
3.5.
Yeah, and I managed to get a fixed rate the other day for some clients at 3.15.
It's not bad. I mean, you know, like compared to other European other countries, US, where people are used to paying 5, 6, 7%, Spain is still cheap. You know, 3% on a 20-year loan mortgage or 25-year loan mortgage is cheap money.
I think there's other things also to be said about not borrowing back home to buy in Spain, because if you're borrowing back home to purchase a property in Spain, then normally what you're doing is you're releasing equity from your main home. There's risk involved with that in order to purchase a property in Spain. It's probably wise to think about leaving your assets at home separate and then coming out when you're purchasing a new asset here in Spain, actually doing the finance here as well. Apart from the fact that you're actually borrowing in euros rather than in your currency back home, you're kind of separating things out, if you like. So you've got your main house back home, mortgage or whatever, and then you've got your new Spanish property with the finance here in Spain. So your assets are separated. It makes it nice and clean.
So if something were to happen to your business or to whatever, like your assets in Spain are totally separate to what you were. Interesting.
Exactly.
What are the different types of mortgages I can get in Spain?
There's 3 types that you can go for. One would be a fixed interest mortgage, which basically in Spain, when you get a fixed interest rate, it's fixed for the full term of the mortgage. So let's say you get a 20-year mortgage, the rate is fixed for the full. The second type is a variable rate. So basically that is where you get Euribor plus a margin, and then that's renewed on an annual basis in line with Euribor. So if Euribor comes down, then your rate changes. If Euribor goes up, your rate changes as well. And then they also do, not all of the lenders, they'll also do a mixed mortgage, a mixed rate mortgage, which is where it's fixed for the first 3, maybe 5 years, and then after that you go into a variable rate.
In Spain, you have a early cancellation or early amortization percentage?
So on a variable rate, you'd be looking at 0.25% for the first 3 years. After
That's
that, it goes to 0.
Okay, so it's even better than what I thought.
That's
Because one of the ones I signed like years ago was like 1% cancellation, but you're saying I've seen others that
rate.
yeah,
but on a fixed rate, you're looking at 2%
exactly
for the first 10 years,
okay,
and then it reverts to 1.5 after
yeah,
that.
so that's more or less what I was thinking. Yeah. But if you just put it into context, right? Imagine like you're looking to flip a property in Spain, right? And you buy it, you buy a property on a 20-year mortgage, right? Which is going to be a very low down payment monthly, and you put that property, you renovate it, you put it on the market, and then at the end when you come to sell it, your cancellation can be anywhere from 0.25 to 1.5%, which is peanuts.
Yeah, I mean,
what? It's peanuts.
1.5%?
1.5. I mean, come on. If you break it into a flip, so you're buying a property of 600,000 euros, and you're going to be financing 500,000 euros for every 10,000 euros.
You pay off, it's 150 euros.
Exactly. So if you pay off a 500,000 euro mortgage, 10% will be 50,000, 1% will be 5,000, 2,500 to 4,000, 5,000 euros. peanuts.
Yeah,
if your flip is going to be making 20 or 30%, I don't think you can do it anywhere because other clients I know from other countries, they go, if I cancel the mortgage earlier, in other countries at least, they have to pay all the interest of the entire mortgage over the entire 30 years.
No,
right?
That's right. No, you do have a lot of flexibility in Spain, especially if you're on a variable rate mortgage.
Yeah.
I mean, you're only going to be paying a penalty for the first 3 years, and it's 25 euros for every 10,000 that you pay off, which is nothing. And then after that, it goes to zero.
I have so many clients that come over and we're not really thinking about getting a mortgage and end up getting a mortgage because you think, the conditions are very good in Spain. It's not, I mean, for example, client coming over, with 800,000 euros, wanting to invest just in investment properties, flipping or whatever. Like if you look at what the financial markets in Spain offer you as a consumer, you'll take advantage of it. I mean, why not?
As an entrepreneur, if you've got your own business back home, if you can use that cash in your business or invest it elsewhere and get 6% or whatever on your money, and you're paying 3% on your mortgage, it makes sense.
So how does that come up in conversation, Kian, when you're talking to clients that aren't considering a mortgage?
I just think every client is different, but sometimes when you get like more the investor buyers, people which are looking to buy properties as an investment, they'll say like, this is my lump sum, right? I'm coming over and I want this return and this is what I want to invest in the market. And they'll say, I want to invest 600,000 euros, right? And you just sort of go, hey, it's like blackjack. How about you separate your bet into two?
You help them connect the dots.
Like, let's break it down into two 250s, you can rent one out and sell the other one on completion or whatever, and they go, well, can I get? A lot of people don't know they can get a mortgage in Spain. A lot of people think like, I'm Spanish. Yeah, exactly. They just say, I can't do that, and they think, it's too complicated.
In any case, they wouldn't know where to start. What are you going to do? Go to Santander and stand in a queue and hopefully somebody will speak
Good luck
English
with that.
and talk about.
I will say something which people need to know about is the Spanish banks are, great for lending, residents or non-residents mortgages, but the customer service in Spain, and I will say it's one of the worst customer services in the world. So any client that wants to go and go into the taquilla and get a mortgage, like good luck with that. Like so Alison, I've got one more question. What's the sort of the ugly side of mortgages, the hard part, the frustrating part, the thing that people would not imagine is frustrating? What would you tell our audience?
Well, I mean, it's a completely different process to what they're used to back home. So for a start, it's getting the banks to understand your situation. The key to doing a good job is having the right contact persons within the bank. So people that understand the documentation, that understand tax returns, that understand self-employed people, people that have their own companies back home, that they pay themselves a minimum salary and the rest in dividends, that kind of thing. So that's very key. And then the frustrations can be, I try and take away a lot of the frustrations, because if you're dealing with the bank directly, you'd end up pulling your hair out. The frustrations, we can get to the stage where we've got the economic side approved, and then we can get onto the property. Maybe the valuation comes in low, or there's an issue with the property in that the meters have not all been registered, or there's a license missing, which is why it's important to also have a good legal team for your clients as well, because they should be covering all of that. They should be doing good conveyancing services and making sure that all of that is covered. But the bank will also do that from their side, because they are taking a guarantee over a property, so they want to make sure that that property is fully legal and everything's fine as far as using it as a guarantee is concerned.
That's a really interesting topic. Like one of the properties I bought was in Los Lagos, Santa Maria Golf, which is a very popular development in Iberia, and it's popular because it's a very good development, but it's also in real estate terms known, or in the market known, because it hasn't got an LPO. Yeah. And I remember like how hard it was to get the bank to mortgage a property. At the end they did, but not all properties without an LPO is the same.
With that. It's better now because the banks recognise that if it's a property that was built 25, 30 years ago,
consolidated.
It didn't exist.
Exactly.
An LPO didn't exist, so therefore you can't demand them to have an LPO. So that's fine. That is not an issue any longer. What would be an issue is if it was built 2 years ago and doesn't have an LPO.
Yeah, sure.
High Homes we specialize in selling new builds. Is there a difference between getting a mortgage for a new build and getting a mortgage for a resale property?
Yeah, the mortgage itself as such is exactly the same. It's the same mortgage. The difference is that with a new build, if it's already built and finished, that's fine, we can do the mortgage immediately. But if it's a new build and you're buying off plan and you've got stage payment, the bank won't assist with those stage payments. So those stage payments will come out of your savings. But we can arrange the mortgage for once the property is finished and the balance is due at that point. The client can draw down on the mortgage.
Okay. So a very interesting question. Imagine your stage payments in a new build is 50-50 and you want a 70% mortgage. How does that work?
Yeah, they can do that.
So basically you would pay 50 during construction, and then at the moment of handover, the bank would lend you 70. So you get some money back.
Yeah.
Even because some developers do have more of an aggressive down payment terms, and it's good to know.
I've done that before. Not with 50-50 because that's not the way it's worked out. With 60-40, and we've actually managed to get 70 for the client, so there's a 10% difference in that.
Nice, super. That pays for the purchase costs.
Yeah.
Great.
Yeah.
Actually, very important question. Banks don't finance purchase costs.
Correct.
right? So, you
that
know,
has to come out of savings.
Exactly.
So your taxes, your notary fees, your legal fees, that all
separate.
needs
We're
to
talking
come out
about
of
just on the
savings.
purchase price.
Just on the purchase price. Yeah, because quite often clients say, you know, especially if it's a new build, price is 500,000 plus IVA. The bank doesn't finance the IVA. Okay.
Are you ready to make the jump now?
I'm ready to make the jump. Let's go. Lend me some money.
Right, guys, so
Sign here.
thank you, Alison, for joining. Episodes just like these in Expert Talks are going to be guiding you guys wherever you are in the world in knowing how this system works, and we hope you find value in them. So until next time, hasta luego.